Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. If you are new to the channel, please subscribe. Also, please click the like button if you're a returning viewer. I appreciate you guys watching all of my videos. It means a lot to me. So, what we're looking at right now, this is my M1 Finance taxable stock brokerage account, my Average Joe dividends portfolio. And as you can see, we have been on a slide, especially today. So not a great day to be in the market, at least for nerves and things like that. But hey, I'm a long-term buy and hold investor, and this is a great opportunity to buy at lower prices because the stock market is the only market where people run for the exits when things are on sale. And of course, this is just the tariff uncertainty, and this could get worse. It could level out. It could get better soon. But I think overall, 1, 2, 3, 5, 10 years down the road, I think investing in the stock market, of course, in broad-based index funds, or just you can create your own kind of portfolio like I've got here, where I have 50 different individual positions as well as an ETF SHD and a closed-end fund BST for some income generation. But I believe, though, you should have a strong foundation of ETFs like a VTI VU, like a total stock market index. And that's what most people will invest in, like in your 401k and things like that. So, as we can see, though, over the last year, though, we're still up 5%. And then when you add in those dividends, it's 9.55%. And of course, the purpose of this portfolio is mainly to generate income. Of course, I want to see stock appreciation as well. And what I'm doing is I'm providing full transparency in my buys and sells and those dividends. And the only thing I ask in return is to please click that like button. I'm not trying to sell you guys anything. I want you guys to invest in yourself and your future. Let's look at the last month of the portfolio, and you can see we're down by 5%. So it's been a pretty bad month. Look at the last 3 months, kind of the same, down 4% there, and then just year to date down 3.22%. So let's get into the activity log, and we'll see what the buys were. Two of the buys are going to be dividend drips. This morning I woke up and I got two dividends. One from Kimberly-Clark for $13.49, and then HP for $7.45. And what I'm doing with those is I'm going to drip those back into those positions. We're going to see the Kimberly-Clark and HP dividends are going to be more for the next time with those dividend drips. So what I've done is I've deposited $100, and you can see that right here. Here's the $100 deposit, and then I pick 5 stocks on Thursday, and I put $20 into each of those, and then I'm going to show you what the next new dividend is going to be for those positions. In this case, it's going to be 7, since there were 7 buys, and again, 2 of those are drips. We're going to look at historically this portfolio from 2021 onward. We're going to look at the dividends and how those dividends have grown over time. Then we'll close it out with my total net worth, which is really taking a dump. But hey, that's okay. This is just part of being a stock investor. If you cannot take these market gyrations, going up and down, then you probably shouldn't be investing in stocks. If you're going to panic and sell it, and I wouldn't do it. That's just my opinion. We'll get into these buys, and I'll show you the fractional shares for each of those. So we're going to have to kind of do a little bit of back and forth, but I'll click on each of these and read off the fractional shares for each of them. So HP, again, this is a dividend drip, and right now I'm not withdrawing dividends from this portfolio. I'm dripping everything back into the portfolio, and with HP, that drip, it bought 0.31597 of a share of HP, so about 30% of a share there for HP. And then Procter & Gamble, this is one of my choices. I chose Procter & Gamble to add to that position with my own money, and that bought 0.11538 of a share of PG. Then next up, I chose Starbucks, and that bought 0.21713 of a share of Starbucks. These are going to be all fractional buys here. And then with Lowe's, as that's another one of my choices. I put $20 into it. I had 48 cents of leftover money in the account. Most of it was from Nvidia. Since it's not big enough to drip, there's not a whole dollar. I just took that 48 cents and put it into Lowe's, and that bought 0.09104 of a share of Lowe's. We're going to see, though, these tiny drips are going to, these buys and drips are going to make a difference for the next dividend. And the monthly, quarterly, and annual dividends will also go up as well. Next up, I chose A.O. Smith, and that bought 0.31414 of a share of A.O. Smith. And then Kimberly-Clark, again, this is a dividend drip, the 1349. That bought 0.09198 of a share of Kimberly-Clark. And then last up, I chose JP Morgan, $20. That bought 0.08568 of a share of JP Morgan. We're going to go on over to my Google Docs spreadsheet, and I'll leave a link below to this Google Docs spreadsheet. You're welcome to use it. And what it shows is it shows the company ticker symbol, share price, average share price I've paid for each position, showing is using the VLOOKUP in the M1 data tab. We're going to get into that a little bit. And so I don't have to type in my average cost, the number of shares, or cost basis for any of the 7 positions where I bought fractional shares. We're just going to do a simple copy and paste, and it's going to update it automatically. You can see here's the share price, average share price I've paid, the number of shares I own for each position, the value if I were to sell today. Here's the cost basis that I've paid for those shares, and here's the gain or loss including dividends. Here is that gain or loss expressed in a percentage. Anything above 25% will be in green. Here is the quarterly dividend for each of these. SCHD is marked as purple. It's variable. And then I have 2 monthly pairs here, which are O and BST. And then we can see here is the current yield, and here's the yield on my cost. And the pay date is how everything is arranged. What I've done is I've sorted it by A to Z, and we are in April already. You can see here are the April payers already, and the ones highlighted in green, these paid today. And so far we've received $44.42 from dividends just in April alone, and these are the dividends that are to follow. What I've done is I've hard-coded in the positions where I bought the fractional shares: PG, AOS, JP Morgan, Lowe's, and then Starbucks. The reason I've done that is the next dividend is going to change. It's going to go up since we've bought fractional shares, and how the dividend is calculated is just the number of shares times that quarterly dividend. And of course, since the multiplier is going up, the number of shares, we're going to see the next dividend go up for each of these. And these are going to be May payers. So in May, we're going to see that next new dividend for those positions. And we also have the cash flow monthly, quarterly, and annual. It's going to go up over here. So I've just hard-coded these in so we can see the old rates, but they're going to go up after I update the sheet. And how I update the sheet is I go to M1, to the Holdings tab, and I grab everything starting with the name column, scroll down, and do a copy, and then I paste everything into the M1 data tab. And then I paste it in cell A1. I do a paste special. What it does is it aligns the shares, cost basis, and average for each position. And then remember the VLOOKUPs on the dividend portfolio tab. It's going to pull, you can see like for cost basis, it's doing a VLOOKUP, and it's just searching on PNC. And then it's going to pull up that cost basis. how I have it aligned over there. So we'll do that. We'll paste this in, paste special. Values only, it automatically does it. And it's pretty slick how I set that up, because I was tired of putting in new values. I just want to come up with a quick way of updating. I'm a little bit of an Excel spreadsheet nerd, and use it for my work. So just kind of applied those simple skills using the VLOOKUP to do that. We can see we're going to read off the new dividend now for Procter & Gamble. Old was 10.64, so in May it's going to pay 10.76, but actually it's going to pay more, because in April, that is the month when Procter & Gamble announces their new dividend. Last year they did a 7% dividend increase. Will they do the same in 2025? I don't know. I'll be happy with 4 or 5%. And it's going to kick up that dividend likely over $11 for next time in May. Then A.O. Smith were slowly creeping up and getting higher, and that dividend getting close to $5 from $4.69 to $4.80. And then JP Morgan getting close to the $10 threshold, which would put it in the green, and moving from $9.69 to $9.81. And then Lowe's moving from $7.81 to $7.92. And then Starbucks now above that $11 mark from $10.98 to $11.11. And here we'll go over the monthly, quarterly, and annual dividends, and how we'll see how they've modestly changed, because this was just a $100 deposit with those 2 dividend drips. Not a huge event, but it does move the needle. So monthly, we're moving from $1,051.02 to $1,051.28. And then the quarterly is moving up from $3153.05 to $3153.84. And then annual is moving from $12,612.22 to $12,615.38. And there's one thing I wanted to point out, and one of the viewers, I think it's SCHD Stan, had an excellent suggestion, and that was to use the trailing 12-month average for SCHD on the dividend, and that will make it less volatile. And that's what I've done. We're going to go over that adjustment really quick on the monthly average dividend tracking tab. That way there's not so many ups and downs. It's usually just going to be an upward move, usually every quarter, instead of kind of that jolt from Q4, that usually higher dividend, and then to that really the lower dividend in Q1. I think this will kind of smooth it out a bit. So I put in that average, which is right here. Almost 26 cents is what I came up with for the trailing 12-month average on SCHD. So I'll have to recalculate it for Q2 and then put in that new trailing 12-month average. So thanks again, SCHD Stan, for that suggestion. I love it. It's great. So, and also thanks to all you viewers who comment, and just even if you just watch, I really appreciate it. So let's go on and move this number, the 1051.28, to the monthly average dividend tracking tab. And we'll put 1051.28. It looks like we have to copy something down. Let's see here. Because something in the math is not right. There we go. Fixed it, because what I did was, like I was talking about, the adjustment for SCHD to the trailing 12-month average, it did bump it up 1343 from the negative 1903. And I'm not trying to make up for that or kind of try to show funny numbers. I just want it to be more smooth in to show the growth instead of that lumpiness. And again, great suggestion. But the Kimberly-Clark HP NVIDIA dividend drips plus a $100 deposit. Let's add that in there. That added 26 cents of monthly income. You can see the other events that happen. You have deposits, you have dividend increases, as well as drips. And you have those things that over time have been kicking up that average dividend. And hopefully we'll see SCHD quarter over quarter. There'll be more modest gains. Like if I would have kept it the old way, we would have went down 1903 and then way up in Q2, at least historically, with what SCHD has done with their dividend. I would rather see a smaller increase and more of that linear kind of increase than those jolts, like a plus $80 or something like that, then down 50. That's just it's hard to explain, and it's kind of hard to follow. So that's why I've done that. So let's go on over to the dividend tracker tab. I've been doing these videos since January 2021. Here's the starting portfolio value. You can see the first dividends paid in January 2021 for that first month. Let's fast forward to where we're at right now. And you can see this is the portfolio value rounded to the nearest $100. And we're kind of back in between kind of August and September. But you can see, though, with the cash flow from the portfolio, we were right around 1,000, and then below it with the Q3 SCHD announcement. So, but you can see we're well over 1,000 now for the average monthly dividend. Here's how we increased it, and this is mostly because of the adjustments. There were some other things that did increase it, like right here, the SCHD and mostly the BST. Those two right there, that's what was responsible for that 678 as far as the change in monthly income, at least most of it. So we've had a month over month gain of almost 2% there. Here's the annual dividends now at $12,615.38. So this is like the monthly paycheck I can rely on. Here's the annual. And then here is the annual increase in just in the month of April alone. And then in April, I've deposited only $100. And again, what I do is I do 2 buys. And right now the strategy is $100 on Monday and $100 on Thursday. And just keep on buying. And like I said, I'm a buy and hold type of investor. I'm not trying to like time the market or things like that, or no day trading. I just believe in investing in blue chip kind of investments for the long term to build wealth. And it seems to be working for me pretty well. So let's go on over to my total net worth statement, which is it's significantly lower, but that's okay. I mean, this is a correction. We're getting close to bear territory, but hey, it's part of the game, and I'm buying things that are on sale. The mistake that people make is they either sell here at the bottom or they stop buying. So those are the two mistakes you want to avoid as a stock investor, in my opinion. So over at Vanguard, just kind of show you what the other 85% of my net worth is at. And over at Vanguard, I have an IRA, a Roth IRA, and a taxable brokerage account, all in boring ETFs. And the current value of that is right at $444,000. Here's my work 401k at 98K is where it sits. It's an S&P 500 fund with Fidelity. And then over at M1, I also have an IRA over there. And the value of that right now is right about 658. And not too long ago, it was well over 700K. So you can see how when you have some market fluctuations, those are big dollar, movements, but you have to have fortitude and just kind of bear with it and keep investing into it the whole way. Here's the dividend portfolio, and not too long ago, I was over 280K. It's at 264. Here is my 1-year emergency fund. And this is about to dip a bit. I bought myself a toy. I bought a 2019 Mustang GT 6-speed manual. It's a beast of a car, and I'm kind of a gearhead. I used to have some fun cars back in the day, like a 1971 Nova 2-door 4-speed factory. It was a quarter-mile car. It was a lot of fun, pretty dangerous. Never wrecked it, but it was a whole lot of fun. And then you get married, you have kids, and I had some fun cars along the way, like a WRX that was modified and things like that. But this is just kind of it's going to be a garage kind of car that it's used, And what I've done is I've temporarily, I'm going to finance it for like a couple months, and then I'm just going to move the money over to pay it off. And that's what that line is right here. And we're going to move over here though for this is, here's my 6 month emergency fund here. So you can see even I'm going to burn a little, over $21,000 here in cash from this, but I think I'm okay because I have another 6 months, over here, 30K over here. I have 2 months spending over at Capital One at another 10K. Then I get paid tomorrow, so I'll have another paycheck of cash coming in. And then in the month of May, I get paid 3 times. So it'll be another cash bolster there. So I have a checking account over at U.S. Bank. And then here's the value of my home. Here are the liabilities, and there's a new line item with that Mustang GT, which is about to be paid for. Of course, it's going to kick up my expenses on insurance as well, because right now I have it fully covered because I financed it just for short term, just for kind of ease of the transaction, so I didn't have to have a cashier's check and all that stuff. I could just put a quick $1,000 down out of they took a credit card, the place where I bought it at, and they took the credit card, which has a 2% cash back. And for the first $1,000 charged, they did not charge me a fee. So I was like, well, that's a no-brainer. I'll just finance it. And I was surprised for a used car that it came back at 7%, which is not great. And, especially like 5 years ago, 7% on a car loan was not great. But in this economy where the interest rates are at, I was shocked. I thought it was going to be higher. But again, it's going to be for like a month or maximum 2 months that I have this. I'm just going to, like I said, make it go away with this money right here and just pay it off. And then here is my other liability, which is my mortgage. And the plan is once this gets up to like 200K, right now it's at 175. If this gets up to 200K, I'm likely to liquidate it, pay off the house, and have some extra cash. I like to put a fence in the yard. I rescued a dog, and she's a handful. So right now I've got her on the leash, so could use that. Pay off the house, have enough cash for the fence, and even some extra money too as well. So here, the current net worth. It wasn't long ago I was over 1.8 million. We'll just kind of do some history here back. My high point was actually right here in November 2024. I was at 1.8276 million. And it's kind of hard to see that. It's like, oh my gosh, when you see your stocks kind of plummet, you almost want to do damage control. Like, should I get out of them? Should I sell it? And that's the first instinct. And I'm human. I think that too, of like, oh, if I just would have sold this on this date, I could have saved $200,000 of bleeding or whatever it is, But I don't believe in it. Just keep investing in it. Stay invested. And in the long term, you're going to thank yourself. So here's the breakdown of my assets by stocks: 87%, home equity, and then cash, you can see right about 5%. And that's divided up by pre-tax, after-tax, U.S., and international. You can see here's the average monthly dividend of all sources, including interest from savings accounts at 35.29. This fluctuates too, especially when I move the cash out of here, that 20,000, it's going to lower this average monthly dividend here of the interest. So it's going to go down significantly, and it's going to affect that. But that's okay. This is something that I'm buying. It is a toy, but it's something I've wanted for a long time. And you can see the price tag of this is a 2019 Mustang GT I got for a really good buy. I won't call it a steal, but I was thinking about buying a brand new one, and the new ones are going for 50K plus. And that, I just cannot swallow that pill, because you have to pay the sales tax on that. The insurance is going to be more. You name it, it's going to be way, way more. So I like this, and I'm getting the same experience of a Mustang GT with a 460 horsepower car. It's a blast to drive, and so far it's been worth it. So sorry to ramble about that, but you have to have a point for this stuff. You can't just accumulate a number. You have to have some fun with your life, whether it's a car, it could be trips, it could be whatever it is. It could be freedom to not work for a while. You have to make this do something for you. You just can't have numbers that you stare at on a spreadsheet. It has to enhance your life. So that's all I have to leave you guys with, and just ponder on that. So thanks again for sticking to the end of the video. Looks like I timed out there, but we remember what those buys were. So if not, if you don't remember, just go back to the beginning of the video. So thanks everyone for sticking to the end of the video. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. Everyone, take care.